What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, I want to talk about some specific ways that I am using my infinite banking policies and also share with you the 4 main reasons that I set these policies up and why I'm so passionate about infinite banking, because it just provides so many benefits in our lives. It solves so many problems with the same dollar. Like it can be a really, really powerful financial strategy. But I want to go through this because just to give you guys some inspiration and just to maybe start maybe thinking about some of the things that some of the ways that these types of policies could benefit you as well. Because I do think you need to be strategic when you're setting these types of policies up. There's usually very specific reasons. Like you don't just want to set the policy up and then just leave it there. I mean, I suppose you could, but when we set them up for the infinite banking concept, it's designed to give you a lot of benefits that you can utilize, but that's the key. You have to actually utilize them. So I want to go through some specific ways that I'm using my policy and the main reasons. So actually, I'm going to start with the 4 main reasons that I set up my policy. That's kind of going to tie into how I'm actually using them. So I have 2 policies right now, and I've done videos breaking them down, how I set them up. I'll link those down below. All right. But reason number 1, the primary reason that got me interested in infinite banking and setting these policies up was to accelerate the wealth building process in my life with the infinite banking concept. And when you understand how the infinite banking concept actually works, you can see how beneficial it is to the wealth building process because of all the benefits that we get. And one of those benefits being control and liquidity of our money without and having the ability to use that money to build wealth like we normally would without interrupting the tax-free compound process that we get with these policies, right? So a couple of different ways that I'm doing that right now. And actually, I'm keeping a lot of my cash value liquid right now. I'm not using a ton of it. I do private money lending. Right now, I'm just building the foundation for it, really understanding how the business works. I think that is key when it comes to building wealth. I'm not a fan of just putting your money in something and then, hoping that 30 years down the road, it does what it's supposed to do or that you're hoping to do. I'm just not a big fan of that. Not saying it's bad, but it's just not in alignment with how I want to build wealth. I want to build wealth with things that are backed by hard assets if possible, things that I have control over, that I can have influence in or on. To me, and then you combine that with like really understanding how the strategy works, whatever that is. It doesn't have to be private money lending, but for me, it just makes sense because I can be in a first lien position on a real estate deal. It's backed by a hard asset. I can control it. I can, if something goes wrong, I can seize the property if I needed to, right? It's backed by the hard asset. And it's real estate too. I've always wanted to get into real estate. This is just the way that is in alignment with me. But I think understanding the process, like really understanding these things, these types of strategies work, whatever strategy you want to use, I think is very key in reducing. Like when you hear private money lending, you might, I'm sure a lot of people are like, well, I don't know, you're giving your money to strangers. That sounds really risky, whatnot. And it's not as risky as you think it is when you understand how the process works, how to protect yourself, et cetera. So that's going to be a major way that I'm going to be using my policy. And one of the reasons that I set the policies up, because that was something that I always wanted to get into. And but why not do that and build wealth that way in the most efficient way possible? We'll talk about that in a minute. Another way that I'm using my policies to accelerate the wealth building process is I'm flipping heavy equipment. It's very similar to flipping real estate, but it's just with like forklifts and things like that. And I already closed out my first investment with that. I'm waiting on the second one to close out. And I just did a video walking through that deal and how it a pretty significant return on investment. And when you start to see those numbers in real life, you're like, holy smokes. Like if we're like mimicking what the banks do in this case, because that's very, very close to with these policies when we're implementing the infinite banking concept, we're mimicking what the banks do, right? And when you see that playing out, man, it's really, really powerful stuff. And then obviously for me, also the uninterrupted tax-free compound growth while I'm building wealth, like that just makes sense to me. Sure, there's a small interest cost to having that liquidity, but that's a very small price to pay. in order to have control and liquidity of your money while it's getting uninterrupted tax-free compound growth. I'm just, when people push back on that, I'm just like, I'm not seeing it. I don't know what you're talking about. Like, how do you not see how powerful this is? And, we're so fixated on rate of return too. Like, these policies will typically net 3.5, upwards of 5% net tax-free compound growth. And that doesn't sound like a lot. But when you have true uninterrupted tax-free compound growth, man, those numbers can get significant over the next 30, 40 years, that's what we're focused on, right? When we're building wealth, even if you're not using the infinite banking concept, like if you're a fan of 401ks and stuff, we're typically, when you're contributing to these types of vehicles, you're thinking 30, 40 years down the road, right? So when, it does take a while for compound growth to really take off, but when it does, man, you give it enough time, it's pretty incredible. And that can, another benefit of these policies is that, you can create some supplemental tax-free retirement income later on if you want. Policies are supposed to be used for your main source of retirement income. A lot of IUL agents will tell you to do. I'm not a fan of that at all, but that is another benefit that you can take advantage of later on down the road. Not to mention it's a really good volatility buffer as well. So all these things to say is that it's all these things really help accelerate the wealth building process when we have our money in the right place. That gives us the amount of benefits, that gives us control and access to it without interrupting the compound growth. So my money's growing in my policy while I'm building wealth over here with the private money lending. I'm flipping equipment and things like that. And I am going to take advantage of some specific stock trades at some point as well. Like, that's why I'm keeping a lot of my cash value liquid right now, because I think there's going to be some major opportunities in the near future. I don't think we're going to have that they're telling us we're going to have. Maybe we will, maybe we won't. But I am keeping a lot of my cash value liquid at the moment to take advantage of those opportunities, because that is when real wealth is built, is when things are bad and we enter recession and things like that. That's where real opportunity presents itself. And you've got to be, if you're going to take advantage of that, you have to make sure you're in a position financially in order to do so. And for me, this kind of brings me to the second reason that I set these policies up and why I'm so drawn to infinite banking. Reason number two is I wanted to get my safe, emergency, and opportunity money out of the banking system for a couple of different reasons. One of the main reasons was my money wasn't really doing anything in the bank, and I wanted to be in the best position possible to take advantage of the opportunities that I think are coming over the next 6, 12, maybe 18 months. And for me, sitting in the bank, I still do treasury bills and stuff like that, but sitting, having a large amount in the bank, not really doing anything, just didn't make sense to me anymore. Like, why not get all these benefits with these policies, have my money growing, getting that uninterrupted tax-free compound growth, among the other benefits. So I'll get to that in a second, reason number three. But here's the other reason, guys. With regards to like getting the money out of the banking system, I don't trust the banking system whatsoever. And I just did a video too on, tax increases, the capital gains tax they're trying to increase right now. You don't think they're going to do that? They're going to mess around with tax brackets and increase income taxes and all that stuff later on down the road. How do you think all this debt is going to be paid for? It's taxes, right? Not to mention you have inflation as well. So like, and here's the thing, guys, like, when you do your research, banks do not have a good resume at all when it comes to being a safe place to store money. They're actually very risky. Now here's the thing. I'm not saying take all of your money out of the bank. It's not even financial advice. I'm just sharing what I'm doing with these and why I set these up. But they don't have a really good track record. They're not as safe as they're made out to be. And you look at the Great Depression, you look at the savings loan crisis, you look at 2008, all the banks that failed, and sure, maybe you have FDIC insurance. Okay, well, that's kind of a scam too, because they have barely 1% of all the in reserve obligations. That's a joke. Not to mention, even if you have that, how long is it going to take for you to get access to your money? Like the bank, if it fails, whatever bank you're in, would have to go through receivership. And what's that process look like? You're going to have access to your money? Maybe, maybe not. How long would it take if you don't? Right. So these are all things that made me want to get my money out of the banking system, especially as I started to research and learn how stable and just how financially sound these mutually owned life insurance companies are, where they've paid dividend. A lot of them have never missed a dividend payment in 119 years, 146 years, some of them over 150 years. So while all the banks were failing throughout whatever financial crisis was taking place over the last 150 years, they were paying out dividends to their policyholders. Like, that's how awesome these companies are. And so it got to the point where I was like, do I really want to keep a large amount of money in the bank, even if it is FDIC insured? Do I want to deal with that? Or should I put my money with these incredibly powerful, strong, financially strong companies, the best risk management companies in the world? Should I put my money with them? Not just because of how financially sound they are, and I sleep much better at night having my money with them, but also all the benefits that I get. Because, sitting in a bank, checking account, whatever, even a money market, you just don't get anywhere near the amount of benefits with these policies and the safety you get with these companies. It's just, there's really no comparison, right? So that's reason number 2. I wanted to move my safe, emergency, and opportunity money into a more efficient vehicle and reduce my exposure to the banking system. Because, again, I did a video on this. In addition, I was talking about, we just had our first major of 2024. Is that the only one? Like, these banks are sitting on massive unrealized losses, and I just don't I don't want that exposure for my hard-earned money. All right, reason number 3 for starting my policy and how I plan to use it later on, hopefully much later on, is the living benefits, guys. I don't think this is appreciated enough, this benefit. I think it's often significantly overlooked. And I get it. It's easy to get sucked like all the benefits for like building wealth, and that's really great stuff. But it makes it easy to overlook something like the living benefits. I think preparing for when you do get older, and eventually, we get old and we break down, we get sick. It is what it is. I think the earlier you prepare for that, the better you're going to be when and you're going to be the care that you want and need when you need it. And, living benefits, meaning if you get diagnosed with if I were to get diagnosed with a chronic, critical, or terminal illness, I would have access to a very large portion of the death benefit so that I can get the care that I want. And, that maybe health insurance wouldn't cover. There's a specific facility that I want to go to that insurance won't cover or will only cover for a certain amount. Like, guys, there was actually, I'm probably going to do a different video on it, but there was an article that I read the other day about how, it's basically like you have to kind of plan on like a third of your retirement assets, like plan to use them for medical expenses. Like, it's medical expenses are so expensive, guys. And I've got numerous stories of this. I was actually talking to my brother about this actually it's today as I record this. And we knew somebody that unfortunately was diagnosed with Alzheimer's, which is just a nasty, nasty disease. And she was pretty young too. She wasn't very old. I think she was in her early 50s, mid 50s maybe. And it was really, really sad. And I remember my mom talking, because these were like family acquaintances and friends and stuff. And I remember her telling me about how much it cost her husband for the facility that she was in, the living facility, eventually hospice, I guess. But it cost him like $80,000 per year. That's crazy. That's an insane amount of money. And thank God he was in a financial position. He makes good money. He was in a financial position to get that, throughout that very difficult process. But how many people don't have $80,000 per year lying around to get into a good assisted living facility when something like that happens, right? So, it's just when you hear stories like that, it's like, if you have a policy in place like this that has living benefits that will advance a significant portion of the death benefit, usually income tax free, to get the care that you need when something like that happens, how do you put a price on that? What's the rate of return on that? I think it's infinite. Like the peace of mind that you get knowing that you have this in place just happens, man. And especially setting it up as young as possible too. So that's reason number 3. And reason number 4, I kind of touched on this a little bit. Reason number 4, I set my policy up was the tax-free compound growth. Very few benefits just sitting in the bank, and I wanted the most efficient vehicle possible for my money. Like I said, guys, when you understand compound growth, how it actually works, and why it's so important, it's uninterrupted by investment losses, taxes, fees. use as well. Like, that's so powerful. Just like if you miss a few years, if you go backwards just a few years, even if you get a 0 year, right, which is just a joke for like, I'm picking on my my IUL audience there, but anyways, like it makes such a huge difference. So like when you understand compound growth, like it's not really about the rate of return. It's about volume of money. Like you want as much money in that process as possible when you understand it, or at least I do. So I'm not worried about the internal rate of return of my policy. That's just a bonus to me. And like I tell people too, like people say whole life insurance gets a bad rate of return. Like, well, number one, we're not setting them up for rate of return. Like there's so many that completely misses the point of these policies. But I would also push back on that with this and say, like, if I told you that down the street there was a bank offering you a savings account that was going to pay you 4% uninterrupted tax-free compound growth for the rest of your life as long as you have the account open, and they're going to let you use the money to build wealth like you normally would without interrupting that compound process. And then on top of that, if you get sick, diagnosed with a chronic critical terminal illness, or if you pass away prematurely, they're going to pay out a massive death benefit to your beneficiaries, income tax-free. That's 10, 20, 30 times what you have in the account. Like, would you say that's a bad savings vehicle, a savings account? No, I think everybody would agree that is pretty phenomenal. That's a pretty phenomenal savings account. Everybody would sign up for that. Well, that's what these policies are, guys. that's exactly like they're just very efficient savings vehicles that are going to get this tax-free compound growth, which can turn into a ridiculous amount of cash value later on down the road, the longer you let it go. But it also gives us all these other incredible benefits. So anyways, I'll go ahead and wrap up with that. I hope that was helpful. I hope it gave you a little bit of inspiration, some things to think about. You know, just start writing down, like as you're learning about infinite banking and how these dividend paying whole life insurance policies work, start thinking about what it can do in your life. What problems can it solve? And what are those priorities for you? Like the biggest things that you're trying to accomplish and the biggest problems you're trying to solve or prepare for in the future. Like start to write those things down so that you understand why you would want to set these policies up. And, you know, when you write that stuff down, if you realize, you know what, it's not that big of a deal to me, then, you know, maybe infinite banking is not for you, and that's fine. But you have to understand how these things work first in order to make an actual informed decision. And you have to understand why you're setting them up and what you plan to do with them. You know, for me right now, the biggest thing is using them to build wealth, take advantage of these different wealth building opportunities. You know, so I hope that was helpful, guys. If you have any questions or feedback, please drop them down in the comment section below. I appreciate the comments and engaging with you guys. I really appreciate the dialogue. Even if we disagree sometimes, that's totally fine. I think it's a productive conversation. So either way, I hope you guys are crushing it, and I will talk to you in the next one. To your success, Matty Ice is out.